Hey guys, Bob here with Phil, Trade Genius Podcast. History is repeating itself again on steroids. Stay tuned.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night. And this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics. We give you market levels. We give you the seasonality, what's happening with different sectors of the market. And we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent. And it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening. Hey, Phil, I think you uncovered some pretty interesting information here regarding real estate that I think most people aren't quite grasping. This is not your father's real estate recession. So do you want to throw some of the charts up and talk a little bit about what you're thinking about here?
Yeah, let's just dive right into the charts. So basically, first up, you're going to see the San Francisco Bay Area housing market crashes. That's usually in the past been a fairly resilient market. I'll point to the great financial crisis of '08 and '09. The Bay Area didn't really fall all that much relative to the rest of the country. This time around, though, you're seeing it already a 35% drop from the highs. So this is telling you this real estate market downturn is a little different than what we've seen in the past. When you have a city like this or an area like this that's seen such a drop that in the past has been holding up fairly resilient.
And also, too, California, they said the under 60 population is leaving California at accelerating rates. It's just going to be old people left here and very poor pretty soon.
Well, and I think, too, the state of the city is not good, right? I mean, it just seems like it's just going downhill. People are walking over feces to get to work, that sort of thing. So that has been a big degradation from '08 and '09, for example. So, yeah, I think you're right. There's a sentiment of, being in that city is not as what it used to be, The other graph we have is the housing market inventory surge. So you can see where some of these cities, Nashville, Salt Lake City, Austin, and so on and so forth, are seeing just insane amounts of inventory growth, which is what you see at the market tops when they start to roll over, because you're just seeing what this means is there's just no buyer. There's no buyer to come in here. And we've seen buyers from people that had cash, whether that was stimulus money helping them out, or the bigger culprit was some of these larger institutions were coming in and buying vast swaths of housing inventory to turn into rentals and basically becoming these large conglomerate landlords. And you're just not seeing that anymore. So we have this just all of a sudden we have a cliff dive in demand. And now you got inventory that was rising into that demand, and inventory is growing because demand's not gobbling it up. You're also going to see another chart here, and this is from Goldman Sachs. Now, Goldman Sachs is forecasting a pretty large recession as far as the housing market goes going into 2023. And, our view is that we're going to have an overall recession, not just in the housing market as well. So, I mean, for you to go into some of these markets, now some markets will be flat. And so you have to pay attention to the inventory data in the markets that you're looking at. But if you're going into some of these markets that we showed you on that previous graph, you'd be crazy to buy here. And in fact, if you're looking to sell and you're in these markets, you want to sell like now, because you're going to be into basically a buyer's market going forward. And it's that situation where he who panics first panics best, or sell in this case. So you'd really be wanting to sell here, get out, and if you're smart and time it right, as things drop back down, you can buy in somewhere else and do pretty well for yourself.
Yeah, and I totally agree, Phil. And, this graph's pretty telling. Look what happened going into the great financial crisis, too. Real estate leads economic crises.
Yep.
And this is like unknown. Our grandparents and parents never ever seen housing go down at all. And it's just another asset class that's being traded.
Mm-hmm. Yep. And then, speaking of trading, Airbnb, I think, has benefited greatly from this, but we're going to get into that chart that you worked up. But first, you want to see this chart, which is investor home purchases. And it's showing you that's fallen off quite a bit, the most on record in the fourth quarter, which is saying a lot, down 46%. Now, why is this bad for Airbnb? Well, a lot of people have bought second and third properties and even more. And some people have tens of homes that are strictly Airbnb rentals. And what we're seeing is that not only is the Airbnb demand dead, it's affecting the purchases of these properties. So that chart is telling you that that segment of the market, that niche of the Airbnb, is probably not going to be doing very well going forward over the next few months. And I think that the chart you worked up here for Airbnb, Bob, I think is very telling as to where this thing can go and how far it can drop on this stock, which is helpful for these guys if you're invested into Airbnb or possibly looking to take maybe a short position against it.
Yeah, and before people start asking me about the chart and stuff like that, this is not our normal chart. I was looking really at, these are channels based on volatility and also linear regression. You could see that it blew the top off. Okay, basically a massive short squeeze. Pivot and pause was the watchword. Scared everybody out of this thing short and just blew the top off. Everybody's expecting, no recession, interest rates falling, support real estate market, soft landing, and they definitely front ran it. So if you're looking for a trade, there's probably a trade in here at least to bring it back to the gap fill. And in our experiences, when you blow the top off like that, you're going to come back at least to that midpoint line where you see the blue line in there. So just keep that in mind. And this is one of those stocks that basically is a meme stock that the retail crowd, which were investing $1.5 billion a day in the month of January, Phil. So they poured into all these what we call garbage companies. They're just extremely overvalued. And, you have to just step out of the way or the cement truck's going to knock you right off the road. And you have to let them exhaust themselves. And when they exhaust themselves, they Eiffel Tower this thing right back down. So this is going to be probably a pretty good short going into the next 4 to 6 weeks, in my view.
I agree with you. Way overvalued here, considering what's going on under the hood. All right, guys. Well, that's going to do it for this episode. Let us know your thoughts. Are you looking to buy? Are you looking to sell? We'd love to hear what you guys are looking at on your end of things. And as always, please hit like and subscribe. And please hit that notification bell. If you can set it to notification for all, you'll be sure to get all of our notifications when we publish our new videos, which we do about 6 times a week. All right, guys. Thanks a lot for watching. We'll see you on the next episode.
Trade Genius.